Bitcoin rally, moon bounce soon. Crude don't lose ruling, huddle till noon. Stacks getting bigger than an 80s tune. Fumble fever by now, capital bloom. Bitcoin bling, rocking on.
Good day, folks. Just checking to see that you're all here and that you can hear me. I think everything's switched on. We're a little early, but I've learned that you have to be early with the software because sometimes it plays up. So I'm just making sure. Good day, WeVibe. And I wonder how the market opens up. Yeah. Well, that's what we're going to chat about today and see where things look, how things look across various things. Bitcoin is the mover over the weekend as well. We had the Trump pump on Bitcoin, and we'll of course talk about natural gas and a couple of other things. I'm not sure what you're talking about, WeVibe. If you put something up in the chat, just mention the instrument you're talking about. Not sure. Okay, folks, I'm going to go away for a few minutes. I'll be back in about 5 or 6 or 7 minutes, and we'll get going. Ah, thank you, N1KZY. Welcome to you too. I was saying before I was reminded there was no sound that we will get to all of the charts on natural gas and Bitcoin and stocks and currencies and so on. And the reason I'm setting this up a little bit early is just to make sure everything works, which it seems to be, and it seems to be on the right channel. When I streamed on last it was on Friday to X at the same time, it seemed to create a bit of chaos with the software. So I'm not streaming to X today. Good day, Daniel. Nice to see you, mate. All right, I'll be with you shortly. G'day, Burkan. Nice to see you. All the way from Turkey. Burkan says, hi, man. Man, I earned so much money thanks to you from Turkey. I love you, mate. Keep going through. Thanks, Burkan. Nice to have you here. And I'm glad that you're finding some benefit from this. And yeah, I mean, we're trying to all just make some money from the markets, and it's a tough business. So, you know, the more we kind of chip in together, the better, I think. Right, just waiting for the last few people to arrive, and then we'll start with natural gas today, and then I'll start going through the other things. So if you've got anything else you'd like to talk about, please put it up in the chat now so that we can get to that at the end. That would be great. And any other things that you want to talk about? Maybe you want to talk about the Trump pump on Bitcoin. We will talk about that. Welcome to the live stream, folks. Let's talk about natural gas. It's Sunday night, and we're ready to go. The rollover is tomorrow or midnight, depending on your broker, which is in about, well, it's 7 o'clock my time now, so 5 hours time exactly, the natural gas market opens up. Midnight my time, I'm not sure exactly, I think it's, I don't know, I can't remember what time it is, New York. So that's in 5 hours time, and we're going to have a look at the charts. I want to go through very quickly what's, just mention really, what we're seeing on the news still on Natural Gas Intel, Natural Gas World, and the various other places that you can go and have a look at. You'll have your own sources for this, I'm sure. But there's a general feeling that there's an anticipated increase in demand through LNG mostly. You'll see LNG mentioned on just about every page of every one of these mainstream natural gas websites, suppliers of information, and the story is all about LNG. So generally, we've got a situation where supplies are dropping. In other words, inputs are dropping, production is dropping slowly, bit by bit, storage is dropping, and demand is likely to incrementally increase ad infinitum. As we go along, there's going to be more and more energy demand. The world thrives on energy. There's no cutback in that. Airlines are forecasting huge growth next year. Boeing's investing trillions of dollars, and we're an energy consuming species, humans are, and there's going to be no let up in demand for energy, and LNG seems to be something that's pretty exciting and pretty anticipated by the market. LNG take up from the US will increase the natural gas price. We have about something around about, I think, 11%. Brian from Energy Rogue will correct me. About 11%, maybe it's now down to about 10 or 9% of US production. I think it dropped to just below 10. Goes out of the country in container ships, LNG ships, liquid natural gas. And as that increment increases, that percentage, there will be more and more demand on natural gas. I think generally the overall sort of idea for the future is that this is no longer a transition material or energy source, but there's a different word that's being used now, and it's also slipped my mind, but it's something like that. It's a more than a stopgap now, but something perhaps a little bit more solid, and a lot of interest is being shown in LNG. So the overall environment leading in towards the end of the year is fairly positive. I hope you can see all of this on your charts, on your screen. Now, I want to point out one more thing to you, and I put this up on X sometime last week, and I also got this from NG Rogue. I put this up in the last live stream, or maybe I didn't. Maybe it was just in the video. This is the forward strip for natural gas, courtesy of Energy Rogue. Thank you very much. And you can see this is the blue one down at the bottom here is 2024. These two, the ones above us are 2020, 25 and 26. Ignore those for now because we're not anywhere near there, not yet. We're approaching 2025. But you can see the 2024 forward curve or forward strip actually starts to only pick up towards, I suppose, the end of this month. We're now rolling into the September contract, and there is a bit of a tick up in the price there. But the big tick up takes place the following month in October, where we tick up to about 225, and then a sudden leap up into November and December above $3. Doesn't mean that that path's going to be followed, because these all trade separately, these contracts, and they'll be moving up and down as the front month does as well. So, but that's an indication that there's a general bullish optimism as we approach the end of the year, and those levels will change, but perhaps those curves will remain the same, and we'll see a continued take up as we approach the cold season. So that's all of that. And then again, if you look at natural gas world, there's a lot of stuff about LNG, Vietnam LNG, Occidental Petroleum, selling it, blah, blah, blah. I'm not going to go through that article. Some of this is now paywalled. I haven't kept up my subscription with one of these. I can't remember which one. I don't want to mess it all up by trying to get through this. And Africa is missing the LNG boat. Gas in transition. That's what they're using. Gas in transition. So a transition. I think it's a bit of a pun, this gas in transition, meaning a transition energy source, but also in transition on a boat. That's what an LNG tanker looks like, and that's heading from perhaps the US to somewhere else like Europe, delivering LNG, and Africa's missing out, even though we've got a whole bunch of it just down the coast from me. So that's that. All the news looks fairly long-term positive, but in the meantime, we've got a little bit of a slowdown, and we're going to have a look at the charts and see what's going on. And this is pretty critical for a number of people. I've spoken to some people today, in fact, who are wondering exactly what's going to happen with natural gas. So I'm just going to check that my charts are working. They seem to be. So let me go. First of all, we'll start from, rather than the broader view from the day chart, I'll start with a 15-minute chart. It's a chart that I don't trade off, but I spotted this pattern on Friday. And this is where we traded. We got down to about $2. This is a 15-minute chart. And have a look at what happened at the bottom here. We got stuck here and formed this sort of holding pattern just at $2. In fact, 1 cent, not even 1 cent, 1/10 of 1 cent above $2. And that's where we held, and we eventually closed about 5/10 of 1%. Of 1 cent, about half a cent above $2. Now that was a protected level on Friday. You can see by all of these moves, a lot of fighting going on in this pattern, and there are options expiry. The rollover is tomorrow. So the $2 level, apart from being a very key psychological number, is also a protected number from the perspective of those options. I don't know why anyone would set a strike or a roller, an options price at $2 precisely. Maybe it was $2 and maybe it was $1.99. I don't know. But $2 seemed to be the level, which is very odd. It's not normally at perfect round numbers. However, having said all of that, look at this 15-minute chart. And what we've got actually is what looks like a broadening pattern. Now, I know a lot of you are going to say, well, you can call that what you want, but the price is moving down, and that is true. But this is a broadening pattern, a little bit messy, but nevertheless, it's there. And broadening patterns are one of the favorite patterns that I like to trade off on charts. And I think they've got something like an 80% probability rate of working out. So there's still a very good chance that this could break down. 20% is a lot. 2 times out of 10, this will break down out of this pattern. But overall, the movement in natural gas is very negative, very bearish at the moment. That's placing a lot of downside pressure on this. We'll look at the targets now. when we get to the longer term charts. But also there's a lot of this protection price action going along at this $2 level, which is maybe adding a little bit of optimism. The fact that we didn't break $2 or close beneath it is really important, because that means that the bulls actually won last week on Friday. So, or at least kept that front month contract above that $2 level, which was the intention. So that's pretty good. We've got a reversal pattern here of sorts. It's not very clean. We don't have any real touches beyond this part in the beginning at the top of this move, but we do have the 200 period moving average up there and a few other areas. Remember, this is a 15-minute chart. I don't trade on these, just to illustrate what was going on at this time on Friday. Now let's go to the chart, the smallest time frame that I normally trade off. That's the 4-hour chart, and we've broken down through a couple of key levels here. First of all, that level that was touching this trend line, and that was on Thursday, I think, yeah, 25th. That was where my arrow, where the cursor is now. That was 8 o'clock on Thursday night. So, and it's now almost that time on Sunday night. So that's where we were. But we just broke down there. We tried to hold that level. We tried to hold the trend line twice, 2 4-hour candles in a row. Didn't manage to hold it eventually and broke down. We only broke down towards this low here, and we haven't actually got there. And that's at $1.98 and a bit, 1.99 call it. I can draw a line across there to illustrate that that's the potential support level for a double bottom on this 4-hour chart. Now I've drawn it in red. I'm actually going to change this to green for those superstitious traders amongst us. We want that to be green and not red. So that's where we are, potential double bottom, long track down, very oversold. We tried to get off that trend line. We've now broken down through that trend line. So I'm going to delete this one, because it wasn't a great trend line in the first place, as we explained in the last live stream, with only 2 real touches and a big sort of bulbous gap in between them, so not a clean trend line. So let's ignore that. Now this looks a lot better. Double bottom at 1.98, maybe, possibly. I'm actually banking on that. In fact, we may not even get to 1.98. At Sunday night, the market's going to gap up, and that means, sorry, I'm preempting what I think it will do. Let me rephrase that. At Sunday night, the market is probably going to gap because of rollover on Monday, tomorrow, or tonight, midnight, depending on your broker, and because of the options expiry, that's all being cleared out from Friday. So we are going to gap, most probably. Most weekends we do. Sometimes the gaps are big, sometimes they're small. Last weekend we saw, like, I think it was a 2 or 3 cent gap, almost nothing. Sometimes we see a 10-cent gap. Unbelievably, sometimes 5 cents. Are we going to gap this weekend? If we do, we could gap down to this trend line, or horizontal, not trend line, this support line, and bounce back up again. We could sort of gap down and bounce up, or we could gap right over it and carry on down and just completely miss that support level. Or we might gap up, and that could be anywhere really, back up into this block here, this green block, or the red block above that, something like that. Let's say we don't get any gaps. Okay, let's work on that presumption. It's not going to be accurate or true, but let's trade this as if we're looking at it as is, and it's going to roll over into the next 4-hour candle like it always does with no gap. We'd be looking for support down here at 1.98 to hold with a beautiful double bottom. Now you might ask me, does gas like double bottoms? We know that gold likes double tops and bottoms and triple tops and bottoms. There are a couple of other things that do, like some of the stock indices, things like some of the currencies, like particularly the majors, like trading with double bottoms and double tops and not so much triples. But natural gas does like double bottoms. Now, if we scroll back, you're going to say, well, prove that. And I'm not going to be able to find anything, of course. Maybe I will. There's a double bottom, very similar to what we've got here, for example. A move down, bit of a bounce. Let's have a look over here. Move down, bit of a bounce, back down towards that area. And on this occasion, we didn't quite get down to the double bottom, and we just simply turned around. I'd hazard a guess that that may have been a weekend as well. Yeah, that was a Monday. This is a Monday move down, and then the gap up. This is a 4-hour chart, not a gap up, a sort of a spike up, a lot of thrashing around. That didn't make a double bottom, but it sort of tried. Maybe it got to just over 78.6% down and then bounced back up again. I'm just going to quickly check the chat to make sure that no one's moaning and that everyone can hear me. Good day, Bears versus Bulls. Nice to see you, mate. Haven't seen you in here before. Fantastic. Bears versus Bulls, well, welcome. You're from Trader TV Live, and I frequent your fantastic chat room many times during every week. I have it in the background, and that's at Trader TV Live, Bears versus Bulls in the room with us today. They have a very huge following. I think about 500,000, or maybe it's close to 1 million now. So that's Bears versus Bulls. I think everything's working fine. Let's go back to the chart. So that's the sort of thing we could see. Basically, just move up straight from where we are without making a double bottom, without getting lower than $2. So let's just go back to where we are now. The $2 level is really, really key. I think that $2 level is probably the best buying level at this moment. Maybe 1.98, but probably $2 is an area that I like to I consider to be a cheap support area for natural gas. Let's have a look at the day chart, and you can ask me even more. But first, I'm going to have to get rid of this line because it's not going to show up well on the day chart. That was the expanding pattern on that 4-hour chart and the 15-minute chart. This is the day chart. Now, let's have a look at this very closely. There's that channel that we, semi-channel that we got into, sort of started to form, break down, and then we've tested it from underneath twice now. We failed both times, and we're moving down towards this level. I did draw a Fibonacci level in here last time we talked about this, from the bottom, right from the bottom. That's not the right tool. That's a trade tool. Let's find it. It's up here. I did. That's now stuck there. I did draw a fib in from the top to the bottom. Let's just have a look at that after I've gotten rid of this trading tool. And you can see we've broken down through the 61.8% fib. That's this green line where you can see these blobs showing. And we've now got down to the support line at $2 or thereabouts. This previous low got just below $2, as I said, at 198 and a bit. We'll call it 198. The 786% Fibonacci is below us at 188. And that also coincides, and that will have filled the daily rollover gap. Now, I want to show you this on the Henry Hub, just to show you where that rollover gap is. And if I can find it, Mr. Hub, come to me. Natural gas, maybe it doesn't like 2 words. It's over here somewhere. Pepperstone. No, of course I can't find it. NYMEX, there we go. Right at the top, right in front of me. Right, so this is the NYMEX Henry Hub chart. We had a look at this before. There was that little short-term trend line that we tried to hold. We broke down below it, 2 days down below there. And look at what we've got, the 786 fib there. It's exactly at 1.9. This is a Henry Hub futures chart, not the spot price at Pepperstone, at about 1.93 or 1.92. It's also a previous swing high on 2 occasions, that swing high and that swing high over there. And it's also the top of this rollover gap. The rollover gap is at 193, 94, thereabouts. And the bottom of the rollover gap is at 183. So sometimes when we approach a gap on the charts and retrace to it, down towards it, or back up towards it if it's above us, we will reverse. Let's use this example. If we move down towards the top of the gap, sometimes the top of the gap can act as a support level and not the bottom of the gap. If we need to fill the gap, we will get to the bottom of the gap. Sometimes you don't need to fill the gap. The point is that this is a rollover gap, and it's not a weekend gap or an overnight gap or a trade gap. This is actually a rollover gap from one contract to the next. And if I click on here, you can see which contracts. That was from the April to the May contract. That was the gap. And that was actually a massive gap, a gap up. So could we, and in fact, the gap's a huge gap. It's always, in fact, the bottom of the gap is much, much lower. It's actually at 1.65. But I don't think we're going to get that far. I personally don't feel that. But, you know, I could be wrong. And I'm always allowing for being wrong. It's not a mistake to be wrong. It just means that your probabilities, if you calculated them correctly, if you think you've got a 70% chance of winning a trade, if it's a good setup, then and you get it wrong and you fall into the 30% losing part of that equation, it doesn't mean you were wrong, or it doesn't mean you were bad at what you were doing. It just means that you played the probabilities and you chose the 70% probability path, but it went the other way, the more unlikely way. But it doesn't mean that you got the analysis wrong. It means that you probably got it right, but it just, the probabilities went against you in that instance. Now, I don't think we're going to get that low. I think we might get to the bottom of the gap. 1.84. But I think if we're going to get any further, we might gap down to the top of this gap. And that's where this new contract started. So it's not a bad place to have a go. And that's at 1.93. So either we're going to hold here. I think we might try and touch 1.93, maybe. We'll see. And then bounce up from there. But I have to allow for a move down below this level into this gap. At the bottom of the gap, we're down to 1.63. And then below that, we've got 1.5s and even below 1.5. I don't think that's the most likely scenario. I'm looking to buy more natural gas because I still don't have a full-size position on this, but I'm approaching it. I bought a little bit more around about the $2 level, and I'll consider adding my last position on when we get a clear reversal candle on a 4-hour and even possibly on a day chart rather than the 4-hour chart. Depends how low we get. If we don't get any lower than now, then I won't be adding anything on. If we get significantly lower, and I mean we've got to get 10 or 20%, 10 or 20 cents below where we are now, I'll consider adding some more on, but not until then. So that's really where it is at the moment. So we got $2.006 on the spot price here at Pepperstone, and we got exactly the same on, hang on, is this Henry Hub or what have we got? Yeah, now I've changed both charts. I didn't mean to do that. So we want to go Nat. Let's have a look at the futures over at Black Bull on the 4-hour chart. So this tracks the Henry Hub price, but this is rolled over already. So this is an interesting chart to watch because it has rolled over, and this is trading at 2.03. So we're very close to the bottom of this double bottom, potential double bottom. Sorry, is that 2.03? And the bottom of this chart on the futures is actually at 2.007. Excuse me. Yeah, so, excuse me, 2.007. So I have a position from up here at about 2.21. I have a position from around here on the Henry Hub and over here as well. And so my average price is in that region. On the spot price, my average price is a little bit higher, but not much. I wouldn't mind adding a little bit more on. But look at this futures chart. Let's go to the 4-hour on this Henry Hub futures chart at Black Bull. And as you know, it has rolled over already. So this gives us a clear indication of what the next contract's doing, the September contract. This is the September contract, 2.03. So could we get to $2? Sure, we could move down there and touch $2, or we might just hold where we are at the moment. We'll have to wait and see. But I actually think this looks quite good. We've had a very, very, very long drive, I was going to say, down. That's, I suppose, a drive. We've tried to bounce off this $2 level once, and we're now approaching the $2 level for the second time. If you believe that this is going to bounce from $2 and move up and form a double bottom, it might be a good idea to buy natural gas at around $2, or even at the current price, $2.03. If you don't think this is going to hold here, then you might just want to hold off and see what happens next. There's always an opportunity to wait for the next 4-hour candle. And if that doesn't provide any clues, there's another opportunity in the next 4 hours, and you can just wait for the next candle to roll over. There's no rush. The 4-hour candle is a really good candle to trade on natural gas because it gives you time to look at the charts, to evaluate the movement. Often the movements are erratic and fractious in the shorter time frames, and there's a lot of chopping around. It's a very messy instrument to trade. And that's why if you go to the 4-hour chart, you can get a little bit more of a mellow view of things. And also, you're not nearly as rushed. If you're trading off 15-minute, 5-minute, even 1-hour charts, you're a little bit rushed because you've got a very short period within which to make a decision. When you're trading on a 4-hour chart, you can walk away for 4 hours, go for a walk, go for a hamburger, play some computer games, play some music, watch Baby Rainbow, whatever it was on Netflix. Can't remember what it's called now. Was it Baby Reindeer on Netflix? And you can come back 4 hours later, having relaxed a little bit and chilled a little bit, stood away from the charts and regained some sanity. If you're trading those very high frequency 5, 15-minute, 1-hour time frames, it's incredibly stressful. When you get to about my age, the stress becomes less desirable and you want a more relaxed sort of lifestyle. So that's the way we are in natural gas, folks. I've taken quite a long time, about 20 minutes to talk about it. But please, if you've got any further questions on that, now's the time to put that up in the chat, because I will cover that and complete natural gas. You've got about 30 seconds to put your question up, and then we're going to move on to other instruments. I hope I've been clear. I felt like I wasn't quite clear enough or concise enough or precise in what I was trying to say. But basically, in summary, we need to hold the $2 level tonight. If we don't, we're probably going to go to 1.93, maybe with a gap, maybe without a gap. We might gap up, we might gap down. Who knows? It's all up for grabs. There's a lot of tension going on in the Middle East, which could put a bit of pressure to the upside on natural gas. Unlikely, because we're basically talking about natural gas supply from the US. But maybe a little bit of uncertainty in the Middle East. Hezbollah seems to be becoming more and more problematic, or you might say Israel is becoming more and more problematic, depending on your standpoint. But nevertheless, there seems to be a lot more tension going on there, which could add some fuel to this natural gas rocket rally that I'm hoping that we'll get this coming week. So there we go. If you've got any questions, I'll just read through them very quickly. Thanks, Bears versus Bulls. I'll see you tomorrow in your own chat room. I'll pop in and say hi. And I'm also waiting to do to jump on your stream. So let me know when you guys are ready. I'd really like to do that. I haven't had time recently. So I'll catch you on your stream. I'll catch up with you there tomorrow. But thanks for visiting. Damajan, there are some people already talking about natural gas at 1.6 again. Yeah, of course they are, Damajan. Don't worry about what people are talking about. That's not really important. What's important is what the price actually does. I'm sure there are a lot of bears around at the moment. If you remember the last time we got down to $1.50 or so, I'll show you on the charts very quickly. If you were around at that time and trading natural gas, not very long ago, that's where we got down to about 152, and that was in February this year. And when we got down there, everyone said it was going to zero. A lot of people said it was going to $1. A lot of people said it was going to 70 cents, $1.20, $1. There were all sorts of numbers floating around, and really, this is basically $1.50 is about as cheap as natural gas gets. We got there, we formed a triple bottom, beautiful, more like an M shape actually, because this bottom didn't quite reach the middle, or the middle low didn't reach the bottom, so sort of a well, more like an M or a W type shape, but a triple bottom really. And that's what happened last time, and everyone was saying this was going to go much lower, but it didn't. It tried once, it tried twice, and on the third occasion, forming that big gap, that's what moved us up. That's the gap we're looking at right now, in fact, after that last move down to 1.5. Now we're down to $2. Are we likely to go back down to that triple bottom? I don't think so. It's a triple bottom. I'll show you something out of interest if you want to know what happens after triple bottoms, successful triple bottoms like this one was. And we've now retraced almost 78.6% of the move from that triple bottom. I'll show you a chart that will give you some encouragement. Not a promise or a guarantee, but some encouragement. We'll go to gold on the day chart. And if you were trading gold a couple of years ago, when was this? I can't remember now. Gold on the day chart. Where are we? Yeah, there we go. So this was gold going back to October 2022. If you were trading gold at that time, we were trading, if you remember, at $1,600 or very close to $1,620. Very close to $1,600. A lot of people at that time were calling for gold to go to $1,500, $1,300, and I even remember at 12, I think it was $1,190 or $1,210, somewhere around $1,200. We only got to that level, $1,620. We made a triple bottom and took off from there. Now look what happens after a triple bottom, and this is very typical of a triple bottom. And we're seeing a triple bottom. We saw one last time on natural gas. We'll go back to that chart very shortly. There's the triple bottom on gold, a healthy retracement, not 78.6% like we've seen on natural gas, but natural gas is a different sort of animal. But this did retrace about 38%, I think. Just about. So gold retraced 38% after that triple bottom, and then it never looked back. That's gold, and that's where we are now, at 2.5 or thereabouts. We're long on gold, by the way. We'll cover all these other instruments shortly in the next half an hour of this session. Now let's go back to natural gas and look at what happened on natural gas on the day chart, and keep that gold chart in mind. This is natural gas. There's the triple bottom, big move up, retracement, not 38% like gold did, which is around this orange level, purple to orange level, but we've retraced so far 61.8, and we might get to 78.6. That triple bottom is very similar in shape and sort of a lot of different things to gold. Gold moved down quite sharply like it has done here, very similar to this, made a low. Gold was very, very similar, hung around that level, dipped down, triple bottom, and gold took off from there. Gold is on this path right here, this black path. This is what gold has already done after its triple bottom, and this is where natural gas is today. I'm not saying this is going to happen, but I think that there's every possibility. There are lots of good reasons for us to be bullish on natural gas. One, we've got increasing supply, increasing demand from as we approach the seasonal demand and weather demand. We've got a general bullish sentiment when it comes to LNG and exports and gas in transition, this lovely new term. Not a transition fuel, but now it's gas in transition. It sounds so much nicer. Doesn't sound like methane leaks all over the show and poisoning the atmosphere every day. Sounds lovely. So we've got all of that going on. And we've got this $2 level that was defended successfully on Friday. It's a big key round number. It's the top of the bargain, the bottom of the bargain basement into the dollar store region. Once we get to $2, or just a fraction below $2, we're in the dollar store region. So we're at, let's call this the dollar store region right now. We've got bullish sentiment. We've got seasonal pressure coming onto the price, pushing it up. We've got this big triple bottom, beautiful triple bottom, move up, retracement, Fibonacci retracement. Yes, it's a big one, 78.6. It's the extreme Fibonacci retracement, but actually my favorite. And if we bounce off here, we should see natural gas do something similar to gold and start to move up into these higher levels. That's what I'm thinking is going to happen. I'm not banking it. I'm not counting on it. I'm not betting the farm on that. I'm not mortgaging my house. I'm not borrowing money on my credit card. I'm not selling my wife or my dog or my children. It's just what I think is going to happen. If that does not happen, I will prepare a different alternative to this trade. I'll start to hedge, take off size, whatever I need to do, but I need to protect the downside at all times. And you should always do that. Now, this is one of the things I'll be covering in my trading course about risk, particularly when trading instruments like natural gas. And if you haven't subscribed to this channel, now's a good time to do so. And also, there are a couple of links below this video. I'd really appreciate it. There's a survey there. I'd like to know from you what you'd like to learn in the trading course. So there's an opportunity for you to tell us there. I'm going to do some feedback on it. We've had loads of response on that, and the results are absolutely fascinating, and I'll share them back with you. And you'll be able to position yourself amongst all the other traders that have been. I've sent it out to about 30,000 people, so it'll be interesting to see how they've answered the same questions in comparison to you and where you sort of stand in your trading journey and your knowledge journey. So there's links below to just fill in the survey. It'll take you a minute or two. And there's also a link below to get your name onto the early bird list for the course. I'll be sending a lot more detail. It's really important they get on the email list because most of it will go out by email. All right, so that's all of that on natural gas. I'm relatively optimistic, and we'll see how this gap goes today on the weekend. In a few hours' time. It's now half an hour closer than when we started this thing, this live stream. All right, so more questions quickly before we go on from natural gas. WeVibe says, there were some crazy spikes on natural gas down there. Yeah, I called it a porcupine or a hedgehog shape. But that hedgehog shape is actually, as I showed you at the beginning of this video, is actually quite similar to a broadening pattern. It's a spiky little broadening hedgehoggy pattern. And maybe, just maybe, that pattern's telling us that we're going to gap up. I don't know. We'll see. But it was a very interesting chart pattern, that's for sure. Yeah, I'm so glad you're here, Bears versus Bulls. I see you almost every day. You never see me, so it's good to have you here. People talking about natural gas at 1.6, sure. People will do that. Sam stuff, welcome to you, Sam. Hi, Sam. You say, hi, James. I rolled over on Thursday. Friday closed at 204, $2.04, 0.3 on my broker. I'm hoping for a double bottom, a bit of side trading, and an eventual bull move. Yeah, so that's the sort of thing that I think most people are hoping for. And I think that's a reasonable expectation. I don't know which way it's going to gap, though. I do fear that we're going to have to gap down to 1.93 and bounce up from there, or we might just gap up and then roll down to 1.93. We'll play this, we'll watch this play out very, very closely. I've got some position. I've got some ideas about positional adjustments if I have to a little bit later on today, which I'll share with my members if that event occurs. But it's all good from our side. Yeah, Bears versus Bull may have something for you to check into, James. If you're interested, I'll follow up when I learn more. Okay, mate. I'll catch up with you in your trading room tomorrow. I'll give you a shout tomorrow afternoon my time. So about 20 hours from now. WeVibe, if it comes down to fill the gap on natural gas, does that bring the old profit targets down too? No, my profit target remains above $3, WeVibe. Yeah, natural gas is tricky, bears versus bulls. I'm going to have to actually spend a lot of time on this in my training course to talk about natural gas. A lot of people trade it. It's one of the most difficult instruments to trade. It does offer a huge amount of opportunity, but it also offers commensurate risk along with that, and the risk is often what gets people on natural gas. And people get greedy, they get excited, they get FOMO, and they see these big 5-10% moves in one day, and they think I need a piece of that, and then they often get trapped. But there's actually a really simple way to trade natural gas without placing yourself in a great deal of risk. I'm getting hoarse. Sam's, your question is, if we sit around $2 for a while, can the active rig number decrease? Yeah, I suppose, yeah. I mean, if people are only getting paid $2, it becomes less interesting. But I don't think $2 is the cutoff. I think it's below that. I think, and actually, I'm not an expert on this. Energy Rogue are the guys to talk to. They have live streams quite often. Go to their channel, subscribe, watch out for their live streams, ask those questions there. They're much better at it than I am. But when it comes to rig count and there's a word for it that they know better than I do. When the rigs start to decrease the amount of output per rig, there's a natural decline as time goes on. So that's occurring as well. So it's not only the number of rigs that might decrease, but it's the output in areas or rigs per rig or per area that might also decrease if the price is too low. But I don't think $2 is the level that's going to trouble everyone. I think there's still I think a lot of people can still keep going at about $2. So, but I could be wrong on that. Ryan, your question is, if you're trading NG2 during July, the August contract, how does the rollover gap affect such a trade at all? The August contract won't be rolling over. The August contract. Oh yeah. So if you're trading one of the forward months, they also roll over, but yeah, I mean, I don't know. I mean, I'm not exactly sure what you're talking about, but you're talking about the July. I don't want to answer you incorrectly here. I'm not quite sure what you mean there, Ryan, but perhaps you could rewrite that and I'll see if you... Oh, you see me in there, Bears versus Bulls. Yeah, I haven't been around for a while. Oh, okay. Fantastic. Yeah, I'll chat with you next week, Bears versus Bulls, or you can email me or pop me something on X and we can chat there. That would be great. Thank you so much. Okay, folks, let's move along and we'll talk about some other instruments now. We'll come back to natural gas if necessary. We've got another 24 minutes, so let's take our time. And if that's all you wanted to talk about, natural gas, then you should leave if you're not interested in everything else. Or if you'd like to just hang around and listen and chat or ask any other random question, feel free. Right, currencies. Now, we've got a couple of trades on here. And I'm going to illustrate to you what those trades are. First of all, in fact, we covered this in some detail in the last live stream, so I don't need to do this too much. Let's look at, first position we've got is long the pound versus the US dollar. Now, we talked about this in some detail. I don't want to go over it again too much. We've come down to the 20-period moving average on the pound. We've broken out of a long-term range, this very, very long-term range down here at about 1.29-ish, 1.2880, even a little lower, 1.28, a horizontal line there. I'm going to draw a block in there just to show you. Right. This is a very rough sort of block, and also these lines aren't being extended for some reason. Just bear with me for a second. Extend right and left. Okay, so we've broken out of that block there, as you can see, quite beautifully. Big sharp move up in the pound and pulled back. Now, currencies are very influenced by interest rates, also economic news, but interest rates form the underpinning or underlying basis for currency rate movements, and then various economic indicators, particularly non-farm payrolls, by the way, which is coming up on Friday this week, first Friday of every month. I've had a look at the preliminary figures on the non-farm payrolls jobs report, and it looks like we're going to see, and this number cannot be trusted, and it's always wrong because they adjust it significantly much later on. In fact, we'll see the adjustments this week for last month. They normally adjust quite significantly, so the number that they call out on the day is never the real number. In fact, it seems pointless to use that number. But let's go with what they put out, and that number I think is going to be below 200,000. I think it was 178. Let's have a quick look and make sure that we get this right, so that we're not just sort of waffling about nothing. And please bear with me. And I'm going to go across to the browser and pull up the economic calendar and see what the projection for it. I think it's 178. We'll talk about why that's an important number shortly. And let's see how far we can go. So it's the Friday, first Friday of every month is the non-farm payrolls report. It's at 8:30 a.m. Eastern Time, New York time. And there's the anticipated number. Where is it? There. Oh, hang on. No, not that one. That's private. Where is it? Non-farm payrolls, private. Government payrolls. Oh, they've divided it into two numbers now. Oh, there we go. There we go. Okay, non-farm payrolls July. Let's have a look at the normal number, the one that we normally use. They've added a couple of extra ones in there, dividing between private and... Do those numbers add up to the same? Non-farm payrolls, government, 40. Non-farm payrolls, private, 155, so that's 195, but they've only got 185 here on the total. Don't know. Nevertheless, let's have a look at this. 185, we've been above 200 for a very long time. Let's have a look at the chart on this, and you'll see, and these charts aren't good anymore. I'm going to have to find a better news source for this number. And we've got COVID problems there. Let's go back. It's messing up this chart. All right, so the blue line is the actual. Now, these charts are really, sorry about this, folks. These charts are really bad. Anyway, I think that's a projected number. 190, July 190. Yeah, so projected number. So we've been below 200 once, actually, and that was in May, and we got down to 175. So, and the projections for this month, for this reading today, next week on Friday, are 185. So much lower than 200. But the chart's terrible, so I can't show you. But the projected unemployment rate has not changed as far as I can see. Projected. This is not the actual number. Yeah, I'm definitely going to have to find a different source. Unemployment rate 4.1, 4.1. So still above 4%. Significant change to the levels that we've seen in the past, around below 4% and closer to 3%. So ticking up, jobs ticking down, unemployment ticking up. That's going to put pressure on the Fed to raise interest rates, which will strengthen the US dollar. However, we're also going to see pressure on the other central banks like the Bank of England and the European Central Bank, etc., to also reduce interest rates. So maybe they'll be kind of simultaneous, I don't know, but that's going to play a role in the pound against the US dollar, the euro against the US dollar, etc. At the moment, it's a little bit unsettled. But what we do have on this chart here is a clear technical breakout and a pullback to the 38 or 50. Actually, we're at the 50% retracement now. Not quite. We're in between the 38 and the 50. Pull back to that level and a break up through this trend line. And a lot of you will say, well, we've got a downward sloping trend line, so the price is moving down. That is true. But when we traded this on the 4-hour chart, we saw very clear signs of reversal, which we took control of by buying the pound. But it's languishing a little bit. There we are there. Few 4-hour charts, spiky candles, doji, spike low, and a faffing around sort of move down after that. Very late to the close on Friday. So we're long on the pound. We'll see how that goes. It's a smallish position and a tight stop loss. So with a bit of luck, that'll move up. We're also short dollar yen, and we've just sold a little bit more on the rally yesterday. Friday rather, not yesterday. Yesterday was Saturday. We sold a bit more on that rally, and it's moving down now. And basically, we were hedged. Actually, we took a hedge somewhere around here. We got out of the hedge, and we're now short and fully short on this. My target for this is all the way down to this trend line. First of all, down here, there's the 200-period moving average we bounced off. We've got to get through there, down to this trend line, which will eventually meet the 200. So we might have to faff around for another week or two until we get to the sort of this apex here at about 151.30 or 20 at this trend line and the support level, and then a breakdown from there. My target on the dollar yen is about 130 to 134, somewhere in that region, and I think we could get there. That's where we are at the moment, and yeah, that's where we hedged and took that off. Right, we're short from the red arrow, and I'm allowing for rallies all the way up into anything to around these moving averages. These will move down sharply now. The green moving average at the top there is the 20-period moving average. This will move down very sharply. Ideally, we'd like to stay below the 20-period, although the yen tends to chop and change through the 20-period quite frequently, as you can see if you look back. So the 20-period is not the best, but the 50 is a good one. As you can see, we often trade off the 50-period on the yen, as we do with quite a lot of other instruments. Actually, it's a good number on the day chart for any instrument. 50-period simple moving average. So there's the 50. That's curling down. In a couple of days' time, the 50 will be down here at about 156.80. That'll begin to move down. And as long as we stay below the 50 and keep moving down, I'm happy with that. And I think the target will be down to the bottom of this block here. This is the day chart on the dollar yen. We've got a long way to go down before we've even made a dent on this huge rally. We've made a good start though, and we've got to get down to the channel bottom, break through there. We'd like to see something at least as big as this drop off, the previous one, and that was in 2022. That was a Bank of Japan intervention, a very powerful and solid intervention that took place there. And we've had another intervention recently at this region here. We had no blow off tops, no spike highs, no dramatic reversals, no exponential rise and then drop, no parabolic moves, nothing like that. Just a simple, tiny little double bottom and a crash down as the Bank of Japan intervened. That's what caught a lot of people on the wrong side of this, because we didn't see any reversal candles, no clear pattern, nothing was obvious here. We did get to a Fibonacci extension level, which I had drawn in there. We pierced through it. I called this level. I said, that's the level we should be watching. We just moved through it a little bit and closed above it. And that was that. And we were sort of thinking, well, this could move even higher. But we made a tiny little double top there, and then the Bank of Japan used that to intervene during various other news releases at the same time, which they took advantage of. So that's where we are, and we got out of our euro yen chart. We don't have that on this page at the moment. As you know, we were short euro yen. That had a huge, massive move down. We took profit at the bottom of that. It wasn't a big position, but we still took profit. Now going across to stocks and stock indices. Basically, we're hedged completely on NASDAQ. We got out of our short S&P after retracement at break even. I have no idea which way these are going to go. Look at the German 30. We thought this was going down, and now it looks more like it's going to go up. We had this beautiful triangle, started moving down, a false breakout through the top there, crashed down to the bottom, broke through the bottom, and then on Friday, with all the other stock indices, particularly the Dow, NASDAQ, S&P, and this one, the German 30, big bounce back up again. And now it looks like heading up towards the top of this triangle and maybe a break higher. Are these markets going to move up or down? I don't know. We're going to have a plethora of economic data. We're going to have the Fed next month. We got the non-farm payrolls on Friday. It's all up for grabs, really. There are a lot of bulls and bears around, as there have been this entire year. This has been the most unlikely and unanticipated and unliked bull market or stock market rally in history, people are saying. Don't know if that's quite true, but let's go with that anyway. And basically, everyone's confused. Are we going to carry on moving higher? A lot of people think we've got a lot more to go above us. A lot of people think that we've reached the top for quite a long time and that this market's going to crash down. I don't know. Let's see how this plays out. I think Friday is going to be really important with the non-farm payrolls. And until then, we'll probably just remain hedged. And if you're not in any trades, that basically means we're cash on NASDAQ, S&P. But we are short NVIDIA, and we are, short NVIDIA, basically. And those are our two entry points. And we're holding NVIDIA short. I'm holding it anyway for a move down to below 100, at least to the top of this double top breakout area, and to close some of these gaps. We've closed this first gap here. Look where this candle reached on Thursday, that spike low on Thursday, the second candle from the right. We closed that first little gap there where the crosshair is at the moment. There's another gap below us, just below here, starting at 102, and the top of the gap, and the bottom of the gap is at 95.6. So that's the gap that I think we're going to have to close. We've closed a couple of tiny ones here. We closed a much bigger one there on Thursday, and then perhaps this week we'll close this gap and then decide what to do. The 200 period moving average is way below us, but I think generally NVIDIA has quite a lot of correction to do. If we look at this chart, like we did with the dollar yen, we've had a decent correction so far, but when you look at it in terms of this overall path, well, that's not it. It's not really. This one over here is a decent correction. This one over here is a decent correction. The one that we've got at the moment is just a little tick down, like we saw a few weeks ago or months ago over there. Actually, months. Nevertheless, we're short on NVIDIA, and we'll see how that goes. And if we get above the recent highs on this new price, the 10 times reduced size at 140.8, if we get above there, then we'll be wrong. As long as we're below that level, my target remains about 95 and probably lower than that. As I said, on NASDAQ and S&P, we're hedged. We've got nothing on Apple. We'll be looking to buy dips on Apple. And Tesla, I think we could follow this path. I'm willing to buy Tesla down here at the bottom of the green S, or I'm willing to sell Tesla up here at the top of the green S where the 20 period moving average is and the top of this gap. So Tesla's a sell at about 238, 239, or a buy at about 200. That's my plan on Tesla. Generally, I think that's there's a lot of negative talk about EVs and the electric car market at the moment. Tesla's going to fall prey to some of that. Probably going to gap down tomorrow because there's a lot of negative talk about all EVs in general. Tesla's in that bunch, and we had very bad and very poor earnings in this last round. There it is there in front of you, lots of red there. Not very good for Tesla. Anyway, we'll see how that goes. Now, gold and Bitcoin. We're doing the Bitcoin hustle today. Talk about Bitcoin right now. We had a weekend crazy rally, the Trump-inspired and Vivek-inspired rally over at the RNC convention. It wasn't. It was the Bitcoin annual convention 2024. Both Vivek and Trump were there and talking about basically saying that the US treasuries are going to retain all the Bitcoin that they've unhanded from crooks. I think about 130,000 Bitcoin. Correct me if I'm wrong, if you know that number. I think they said that figure. 130,000 Bitcoin at about $60,000 or $70,000 a Bitcoin. That's several $billion, about $10 or $12 billion, I think, which they're holding in Bitcoin, and just generally talking this whole thing up. As a result, Bitcoin had a big rally. Why am I looking at the gold chart? As a result, Bitcoin had a big rally on the weekend. It started before the weekend, in fact, started on Friday. And here we go on the 4-hour chart. We had this big move up and down. Let's get rid of it. We're just forming this little triangle at the moment. Have a look at that triangle. I'm going to get rid of it just to clean up the chart. But we had this big move up and down, a big pump, big massive move. This is a 4-hour chart. Let's have a look at the day chart and see how many days this took. I've also drawn a fractal in here, and the fractal, interestingly, comes from this precise move down here in January 2024. Exactly that fractal which I've drawn and copied, and it almost precisely follows the path that we've already got on this last big rally. Now, if we drift sideways and follow that fractal pattern, we'll just drift into that new trend line created by that swing low, that last spike down to the 50, and this previous low. So we got 2 touches, and if we drift across sideways, we get our 3rd touch of that trend line and then move up from there. If we follow that fractal precisely, that will take us up to about 94,000. My target's roughly 94 to 104,000 to start with, but it could go a lot higher. So that's that fractal on Bitcoin. A lot of bullish talk about Bitcoin over the weekend at the Bitcoin pump, as we call it. And on the 4-hour chart, you can see we're holding up nicely, beautifully here. And I mean, what can I say? I'm long. We're long from 59,000. We're now at 68,000. And forming this consolidation triangle, looks like it's moving up. 20 periods curving up, 50 periods holding firm. That horizontal line's holding firm, that's support line. The longer term trend line's holding well, that's the one we dipped down to. This little spike here, it goes through it on the 4-hour. It's clean on the daily chart, and I think we're going to carry on moving up. I felt that the Bitcoin pump at the conference was perhaps a little bit over optimistic, FOMO type talk. A lot of hype. There always is at these things. And even more hype inspired by political figures attending, like Trump and Vivek. So yeah, I don't see any reason to be negative or bearish on Bitcoin. Everything's good. The price is reflecting what the sentiment that we're seeing in that conference, and everything looks pretty good. So my target about $100,000. We're also long on gold. We bought gold last week again. We were hedged for a while, but we've now bought some. And bought some more right at the bottom at the 200 period moving average here. This is the 4-hour chart on gold, and just moving up steadily. There's a lot of resistance above us. So we go to the day chart on gold, you'll see we've got a lot of work to do to get up through where we are now, but we have an inside candle on this day chart. Now, an inside candle can be a continuation candle or a reversal candle. I don't know which one this is going to be, but it is also if that wick low, the bottom of Friday's candle was a little bit lower, that would have been a piercing pattern candle, which is a very bullish candle. We didn't make that wick low, so it's not a piercing pattern candle. It's an inside candle rather, and we've got the 20 period moving average that we're butting up against at the moment. And I also said that we might have an ABC correction on our hands. We retrace back to that ABC line, and the ABC, if A0 is the same, or 0 to A is the same length as B to C, that will take us down to 2329 actually, and that's this level here, the bottom of this order block. It's 78.6% Fibonacci, and it's the natural extension of this Elliott wave, if it is in fact an ABC correction with 0 to A equal to B to C. We'll have to wait and see. Doesn't really matter. We're long, and that's going well, and we're a long way from our entry point already, so I'm happy with that. Copper and silver, well, we've talked about this many times, just basically negative. At the moment, we will turn around on these at some point, obviously. Markets always do, but this is my target on copper. I think we could get into that zone there. Once again, we've got an ABC correction where 0 to A is equal to B to C, and that would take us down into below $4, down to 3.8 to 3.9 level. And there's no reason to expect that that's not going to happen, because we just keep on moving down and there's no reversal. We're at the 200 period moving average. We might try and bounce here. And also, we're a little bit too fast compared to the slope or the gradient of this B to C line, which mimics the gradient of the 0 to A line. So if we do stick to that sort of gradient or slope down, we probably have to retrace just a wee bit, maybe up to about 4.2, maybe even 4.3, 4.4, where these moving averages are curling down towards us. And that would be a good retracement to resell, perhaps back up to this last swing low at the A point, 4.33, $4.33. We could retrace right back up to there, and in fact that would meet that downward slope of that Elliott wave projection, and then we could carry on moving down. That's the sort of idea I have on copper. I'm not willing to buy copper until we get down below $4, but I might be willing to sell it at $4.34. Same sort of thing on silver. Silver's broken, well, firmly below that double bottom support. Once the double bottom support breaks, you can expect a pretty decent continuation of this move. So now that we've broken down below there, if you are short on silver, you're probably in a good position. Now, I do like this very, very much. If you're a short, I'm going to change this to red. I'm not in silver, by the way. I'm doing this for the benefit of those who are trading it, but previous swing high and a double bottom, and we've broken back beneath it. That's very bearish. Target down in here, about 25, into that big order block zone. This is the day chart on silver. Perhaps we can get down to about 25. Perhaps we even need to get back down to about 23. But I think 25, in fact 26, is the top of this order block, or it's not an order block, it's a horizontal rectangle that I drew in myself. But it's also where the 200 period moving average is. So, and it's that previous swing low. So there, right there, 26, we may have to go to 25, we may have to go to 23, but I think 26 is the first go at silver. All right, we've talked about natural gas. None of these markets are open, by the way. I'm talking to you from charts that are not moving, which is quite strange for me because they're normally moving when I'm talking to you. This chart here, this page here represents the dollar against the South African rand and the pound against the South African rand. We're short from the red arrows on those. There's a video on my channel about the rand against the dollar and the pound. Have a look at that. I think that we've got some rand strength ahead of us. I'm not 100% sure, but I'm pretty convinced, but not sure, that we should see a stronger rand going into 2025. With the new political regime in place, a little bit of infighting and faffing and fussing about, but generally a very peaceful transition into a government of national unity, despite all of the jawboning that went on before the election. So I think it's all pretty positive. We've got some good people in key places in the new government of national unity. Now, going across to this page, this is all the softs and the grains. There's a new service we're introducing, end of day trades. Across all of these, we've got sugar, cocoa, coffee, corn, cotton, orange juice, wheat, and soybeans. We're in a couple of these already. We're long on sugar from the green arrow. And if you want to go into analysis of any of these in these live streams, let me know. But I'll do it briefly. But I'll have to do a separate video on these commodities. Probably once a week, we'll cover all of these softs and grains. I'll tell you my positions. I'm also going to be putting this up on a 24/5 live stream where you can see all of my positions live through the week. And that I'm busy working on. Be patient, that is coming. We're long on sugar from the green arrow. Cocoa, someone asked me about earlier. I want to tell you what I think. Someone said there's disease again in the cocoa beans, probably, possibly, I don't know. Haven't read about that just yet. Haven't got to do my research. I don't normally do these live streams on a Sunday. I'll get to that a little bit later on tonight, before the markets open. This is the path I think we might follow. Someone said, well, are we going to go up or down? What about the disease, whatever it is? It's a fungus that affects the pods or the leaves. I can't remember which one. But if we do get another problem with fungal infection on cocoa, decreases in production, the price will go up again. There's no reason for it to not go up. We've got plenty of space created by this massive rally. So we've got a lot more room to move on cocoa, and we've got a big range here for a start from 12,500 down to 7,000. Massive range, huge, beyond the ability to trade it with any sensibility unless you use very small positions. This is what I think we could get though. I'd like us to get up to the 618 fib. We've hardly bounced off. Well, we bounced from that low all the way back up to the 786. We've come down again, made a new low, and could we get to the 618 this time, a slightly lower bounce, back down again, and then maybe up to the 50%, a slightly lower bounce, and then get into and squeeze into the corner of this big, huge, massive dominating pattern on this chart, which makes it almost impossible to trade unless you use very small positions. So this is what I think. And actually, if I use this swing low and swing high as a Fibonacci and see if that coincides with my track that I've drawn in there, you can see that it doesn't. So we'll just ignore that. All right. This is called fitting the chart to what you think or you would like to happen. So we don't have any position on cocoa, but I think we might get a bit of a bump back up to 10,000 and then a rally down. I'm not willing to sell cocoa unless we get a bit of a rally. and I'm not willing to buy cocoa at all at these levels. But we are long on sugar. We have nothing on coffee. We talked about coffee, if you remember. I put this up on X and also in various other places on YouTube as well. I said, what does this pattern mean? These two patterns. When I put this up, it just looked like that. We hadn't gone further across the side there. And the question is this bullish or bearish? I thought it was bearish. Many thought it was bullish. So I thought, okay, well, it's probably, I could be wrong then, but I was actually right. It is bearish. We've broken down through the steeper triangle, steeper trend line on coffee. Got another one below us. I'd like to buy coffee down here somewhere about $215 to $220 or whatever it is priced in, and then a bounce from there. I won't be selling coffee here, and I won't be buying it here until we get a little bit lower down. So that's my idea on coffee. We're also long on corn. We're long from the green arrow, so just I think at break even now. It's come back to where we got in. A bit of a rally, an attempt to move up, a crash down. These crashes and collapses don't always mean that this market's just going to carry on moving down. Here's a good example, if you want an example of that. Big rally and then a crash down. That didn't mean the market was going to continue down. It moved sideways for quite a long time and then moved up from there. We've got a similar sort of situation now. Bit of a start. We got a start. We broke above the 20 on this corn day chart over at Pepperstone, and then we've crashed down back below the 20. Doesn't mean this is going down. It means that we're still stuck in this consolidation range, and the consolidation range is now quite clear, and we can draw it in there. Actually, let me put another rectangle in, and so we've got a top around about here. Let's draw it right at the top of that candle, and we've got a bottom there. So we're in that range right now on corn, and until we get out of there, there's not much else to do. So it's pretty simple. We are long on that though. We're also long on cotton, and but this orange arrow represents a hedge because we went long at the red line and we went short on the breakdown. So we're actually hedged on cotton, and we'll get to that next week in our live streams and so on, and in the members area. And then the other thing, got nothing on orange juice, by the way. If you want to think what I think, if you want to know what I think about orange juice, I think we've got a chance of doing something like this. Although we're now going to have to move this along because it's running to the side, something like that. And let's get rid of this. So if we do get up there, that sort of thing, that's what I'm looking for on orange juice. We'll see. There's no rush on these commodities. We're trading them gently, little bit by little bit. And we're also long on wheat. And we've got a tight stop and hedge, not a stop, a hedge just below this trend line. Very, very tight. It means if we do hedge this trade, we'll be locking in a very tiny loss, and we'll just wait and see what happens after that. I'm not willing to take any major risks on any of these commodities at the moment. I'm not sure if we're seeing bottoms and lows on the major grains and softs and things like corn, wheat, sugar, cotton, soya, the things that we use every day. They're all getting cheaper and cheaper. We haven't seen a bottom properly forming on any of these just yet. And that's it, folks. It's been a solid hour. I hope you've enjoyed it. And I've actually not had the right chart on the page for you the whole time. Can you believe that? Damn it. I'm so sorry, guys. I am so sorry. Thanks, Bears versus Bulls, for your $20 donation. Well, I hope you heard all of that and you wrote it down. So let's go back to the charts. I'll go through them again quickly. I think you heard all of the things I was saying, so we'll just go back. I'm terribly sorry. I must say this software is annoying. It's very annoying. I might go back to the other software. I think you guys use this, Bears and Bulls, Streamlabs. I'm not sure if you use Streamlabs or the other one. But we're back on the charts. Sorry about that, folks. I think there was a long period. Well, it was quite a long time without the charts. I'm very, very sorry about that. So we were talking about the pound and the euro and the dollar yen. I don't know how far we were, actually. How far did we get? Thanks, Bears vs. Bulls. I'll check you out on X. How far did we get before I... damn it. All right, let me go through. All right, we were talking about the pound, if you remember. So I said we were trying to get... I'm not sure how far, but I'll go through these. Let's do 30 seconds a chart. So we're long on the pound after the breakout, through this sort of resistance level, this green block. We've retraced back to it, and I'm waiting for a bounce back up through there. All right, we're bouncing off the 20-period moving average. We're long. It's not looking strong at the moment. It's looking a little weak, but we'll wait and see how that goes. Basically, it's a breakout pullback trade. I do think that there's a danger of the dollar getting weaker going forward, but we haven't seen clear evidence of that. We're still at 104 on the dollar index. We talked about all of these other things already. Can you just put up in the chat where you saw last time? Or was it only on the little bit? How many minutes ago was it? Was I not on the charts? Let's go back to the end. You certainly missed these commodities. We talked about sugar. We're long there on sugar. We talked about cocoa. We talked about all of these commodities not really getting off the bottom and whether we're going to see that or not. Talked about cocoa. There's blight or fungus or something going on with cocoa pods, and that might push the price up. I'm willing to sell up into these levels at about 10,000. I'm not willing to buy cocoa at this level. And we talked about corn. We're long on corn. That's dipping down to this sort of level down here. We have a tight stop and hedge just below this level and willing to do that if we break down on corn. All of these softs and grains are just not really getting off the ground for some reason. I don't know why, but there's no rush. We'll wait for that to happen. Orange juice, I'm looking for this sort of path. I've moved that red line along a little bit just to indicate where we are because we've moved sideways without going up or down. So I've just moved that and shifted that along a little bit. That's the sort of thing I think we could get a Wyckoff spring type formation there on orange juice. Remember that these are always prone to breaking out of key levels and stopping people out, particularly on some of these particular commodities, softs and grains. We're long on cotton. Once again, that's looking a little weak. Very tight stop on and hedge. This is hedged already, so nothing to do on that until that turns around. We've got nothing on soya, and we're long on sugar. We talked about cocoa. You had a look at that. And we're long on wheat. Again, a very tight stop and reverse. Actually, in my case, it's a hedge. So I won't be reversing, but I'll be hedging it with a reverse trade. If we break down beneath this trend line, it'll be a very tight stop and it's a smallish position. As I said earlier, I'm not willing to take great risks on any of these commodities. We've talked about natural gas. I hope we've covered everything that we need to talk about there. We talked about the rand against the dollar and the pound moving down beautifully. And natural gas, I think we covered that in detail in the first half an hour. Don't need to cover that. And I think we've covered Tesla and the pound, everything else. Covered all the stocks. I think we were on the stock charts. I hope we were, because otherwise we'll have to go back to the stock charts. Okay. Yeah, we vibe. That's stop spamming caps. I didn't write that to you. That's from the robot in Streamlabs. So please don't take offense. And folks, if you haven't subscribed, I love your subscription. If you haven't asked your questions, now's a good time to ask. Please visit the links below this live stream video. And there are two links that are important. One is to get onto the newsletter for announcements about the trading course, which is going to be amazing. And most of that information will come via email. And then also there's a survey, and you can tell us what you think we should be in the trading course. I'd love to hear that. Bears versus Bulls, thank you so much for the $20 donation. I really appreciate that. It was super kind of you. And maybe I'll send you one back on Monday in your own chat. And I'll make a note that it's for you. Okay, folks, any other questions? Otherwise, we're done for the day, done for the night. I'll be online at midnight for those of you in my private trading group. I'll be around at midnight. So you can pop in at the Discord and catch me there if you want to ask any questions. I'll be looking at my positions and also advising someone who's run into a little bit of trouble in the natural gas trades. So I'll be actually guiding them through that at midnight tonight. So if you'd like to ask me any questions in the live trading group, my members, please do so. I'll be around. Midnight my time, which is it's 8 o'clock now, 4 hours from now. So whatever time that is in your country, 4 hours from now, I'll be online for my members. Also, on this screen in front of you right now, there's a scan button, top left-hand side of the screen. If you scan that with your cell phone or your smart device, that'll take you straight into the survey and you can fill that in. It'll take you a couple of minutes. Tell us what you think you'd like to learn more about and what your levels of experience are and your skills and the things that you struggle with. and I'll be posting all the results of that up, as I said, in a video, because I think you'll find it super interesting. Yeah, Revibe, gap down or gap up, a $20 bet. Okay, I'll take that bet with you. I think it's going to gap up, actually. I'll take that bet with you, but you've got to be prepared to lose $20. If you think it's going to gap up as well, then we're both on the same side, then there's no bet. So I can't bet that it's going to gap down, because I hope it doesn't, for the sake of several people that I know that are hoping it doesn't gap down. If you're willing to take the gap downside, I'll take the bet with you. Yeah, bears versus bull. It's fantastic to have you. I've been part of your trading group for, I think it's almost 2 years now. It might be 3 years. I'm not sure. And I've popped in there almost every day. I've been a little bit absent recently because I've been super busy, but I spend at least I have it on in the background. And when it's on the TV, I can't see what's going on in the chat, so I can't say hi. But when it's playing on the YouTube app on the TV, I can't see the chat. I can't see what's being said, so I can't interact. But I do see what's going on and the presenters. Damajan, how do I estimate the recession factor globally? In Germany, the sentiment is miserable. How is it generally from my point of view? I think you'll have to ask the Americans. The Americans are what really counts. It doesn't matter what I think in my country or necessarily in Europe, although Europe obviously plays a massive role in the global economy. But we need to know what's going on in China, in Europe, in America, in the Middle East, and even in Africa. And as far as I can tell, it's pretty dire over here where I live. It's pretty dire in Europe and the UK, and also in the US. The US economy has been apparently strong because we've seen the stock market rally, a massive rally. We've seen jobs numbers great up until now. We've seen retail sales, fantastic, GDP, great, just really humming along. And when the Democrats say that they have produced a good economy, they're probably incorrect in saying that it's because of them, but the fact is they have presided over a very booming US economy, which has surprised many people. And the liquidity surplus provided by the COVID lockdowns seems to be, and it's not actually completely clear to many economists just yet, seem to be the reason why we've seen this huge rally and resurgence and excess liquidity driving these markets forward. But we've also seen very high interest rates, and we've now seen the jobless numbers start to creep up. We've seen inflation coming down, but you've already lost 20% of your income, and we're still around about close to 3%, which is not low. It's the top end of the Fed range at best. So no, it's not looking rosy, and something is probably going to have to happen. Plus, on top of all that, we've got enormous spending going on a couple of wars, at least, that we know of, or that are public wars. There's a lot more spending on war that goes on that we don't actually even read about very much. So yeah, billions and billions of dollars injecting liquidity into the economy. Those wars are going to end soon, probably. And when those wars end, that spending dries up. So that will probably push the economy back a bit. The military-industrial complex thrives on war. And those of you who think that you should sell stocks when war starts, you're completely wrong. When war begins, you should be buying stocks, unfortunately. That's what happens every time. I've been trading during wars for over 23 years. And every time there's a war, the stock market rallies, every single time, without fail, even on 9/11 or after that. So... at least when the Iraq War was started. In fact, I remember when the Iraq War was started, I was trading then, and the first Iraq and the second Iraq War, and watching the markets intensely, and they rallied. So when these wars come to an end, we often see a slump in the markets, and that demand for spending dries up, and the markets begin to suffer. So yeah, I don't think I think we're going to have quite a correction. Whether it's going to take place now or after the elections or next year, I don't know. I think we're going to be range bound until the elections, and and that would take us on the NASDAQ. We haven't talked much about the NASDAQ, but that would take us from the top of this current range at about, call it, I don't know, well, it's 20,800, but let's call it 21,000. I've got a couple of channels drawn in here, which make it really, really simple. This is the NASDAQ long-term channel going back to 2022. We've now broken down through this sort of inside red-pink channel. Actually, let's get rid of this. This is just annoying. Why is that still there? We've broken down through this inside pink channel. We've got the green channel beneath the channel bottom beneath us. We've got the 200 and this order block even further down. And then we've got this previous swing high, etc. From the all-time high until we've made a new all-time high. It was there at 16,777. That's a 15% correction, I do believe. Could be actually a little bit more. Let's take it from the top to there. I think it's about 15%. I don't think it's 20. If it was 20, it would be technically a bear market. No, it's 19.4%. So even if we get all the way down to that previous all-time high, it's still not a bear market. It's only 19.5%. So that's what that looks like. Could we get down there? Sure, possibly. In fact, I think it's more likely than not. So the bottom of this range could be 16, but let's start with this sort of 17, 18 level where this channel is, the 200-period moving average, this green order block. And then the top of this range, let's start with where we actually got to the top at 20,800. But the green channel top and the red channel top are slightly above us. We could get higher. But I think we've formed the top of the range roughly for now. And the bottom of the range is somewhere between where I've written the 15, the bottom of this red block. Somewhere in here will be the bottom, I think. And then we're going to bounce up in that very broad range. We'll see a lot of chopping around. Quite a volatile market, probably. Not surprisingly, because of the politics that are going on right now. So, yeah, that's kind of what I think. So are we going to be seeing a recession? I don't know. GDP is still strong. I think it was like 3-4% still, somewhere in that region, according to the numbers that we get anyway. I don't know. Nevertheless, we'll look for a bottom here somewhere at some point, I guess. When you're trading stocks, remember the stock markets are inherently optimistic. The market generally goes up most of the time. I think 6 or 7 days out of 10 on average over decades and decades, the stock market goes up, not down. Natural gas goes up and down equally, often more down than up. So you've got to know which way these markets trade and what their personalities are. Stock market indices generally just go up. Have big bear market retracements. You can make a lot of money in those pullbacks, but most of the time, the stock markets are going up. We should be looking to buy stocks most of the time. 60 to 70% of the time, we should be long. When there's an opportunity to go short, we should not miss out on those, though, because those bear market falling out of the window moves are often 2, 3, 4%. Okay, I'm exaggerating. 1, 2, 3% per day. Sometimes 2, 3 days in a row, you can get 6, 7, 8% drops over 3 days in 1 week. And that's the sort of thing you get in a bear market. So it's good to be able to identify bear markets and get in on them. But it's also good to know that most of the time you should be long on the stock markets. Are we going into a recession now? I don't think so. Oh, is there one due in the next 6 to 12 months? Probably, yes. So that's the kind of way. I've got a bit of dirt on my screen there. That's the kind of way I think about it. But basically, we're also looking for price action. We're looking to trade these off what we see on the charts. The charts don't lie. They tell us what's going on. And we want to know what the charts are telling us more than anything else. Well, I certainly do. Laugh it off. Yeah, thanks. Laugh it off. A stupid software. All right. America thinks is all well. The bear in me is waiting to jump on the SPY puts as the chance comes. Until the long play. Yeah. I think it's probably a little premature. I think we're going to be range for the next 3 to 6 months. Yeah, those Damajan, those channels on NASDAQ are just channels. I mean, you can draw anything you want on your charts. Everyone has their own artistic expression on their charts. And this is just a long-term channel. It's just connecting the lows and connecting the highs. And it just gives you a sort of a broad framework within which to work. I also want to know where the 200-period moving average is always. on the day chart on any stock or stock indice, I always want to know where the 200 is. That's the guiding line, the guiding beacon, the guiding light. We're above the 200, that means we're bullish. When we're below the 200, generally we're bearish. We're well above it, and we've got to get down a 12, 13, 14, 15% correction just to get to the 200. That's how overbought we've been in this recent period. So yeah, I think the bottom of this channel, this green block, maybe 18,000 and a bit, 18.2, something like that. It's a good target to aim for. It's also this previous swing high. It's also a previous all-time high, obviously, as they all are. That's a previous all-time high. That's not a previous all-time high. This is a previous all-time high, correction. And now we've made another all-time high and a correction. Now, one of these corrections is going to be big, like this big one here. All right. But these little corrections that we've seen along the way so far are just corrections, just simply corrections. Nothing more than that, nothing exciting about them, nothing dramatic, nothing scary, just normal pullbacks to the, okay, we have broken down through the 50-period moving average. That's the first sign of weakness. But we're at the 100, we're at the channel bottom, and we're still well above the 200. So until we break down below the 200, or unless we break down below the 200, we remain in a bull market on stocks. Okay, or at least on the NASDAQ. Okay, folks, is there anything else? If you've got any thoughts or comments or analyses that you'd like to put up, I don't mind hanging on for another 10 minutes or so if you'd like to chat about anything else. Just going to have a look at some of the news on natural gas over here that's just popped up on my screen. I also want to have a look at on there we go, on X. What have I got on X? There we go. Yeah, there was one other chart I wanted to show you. Yeah, that's a Bitcoin chart. We talked about this last time. Actually, this chart shows you really what I've just shown you. That takes us up to about 103. If we, on this rally, if this green block is similar in shape and size to these previous green blocks on these last two rallies, that will take us up to 103. 102, 103, 104, certainly around about the $100,000 region. That's on Bitcoin. And that does look very much like a beautiful bull flag. And will this Trump pump push us through the top, up into the green block and up towards there, and then perhaps move down from there? I don't know. But that's certainly the way I'm playing it. This is the pound we talked about earlier. Just to remind myself, the pound, we had that up on, we were talking about this pound chart. We're going to try and test, I think, this downward sloping channel. Remember this low that where we bought, this green circled area? That is the top of the range that we broke out from on the pound that I showed you on the earlier charts. And I think that was all. Oh, and there's that hedgehog I showed you on X on Friday. This is this options battle that was going on natural gas on Friday. If you're not following me on X, it's a good idea to follow me on X because I put up posts about 2, 3, 4, sometimes 10 times a day. But they don't always make their way onto YouTube, so it's a good place to have a look at my current thoughts. And it's an easy place. And also sometimes I do stream on X. I tried it on the last video. A little bit unsuccessfully, but we'll give it another go later on. Yeah, Damajan and Bears versus Bulls. Bears versus Bulls. You should invite Damajan into your trading room and over at Trader TV Live. I don't know if you're able to put up links on here. I'm not sure. I can't even write it on here myself because I'm in the software. Trader TV Live. That's where Damajan. That's where you'll fare Bears versus Bulls every single day, starting at 8:30 a.m. Eastern Time. I don't know what time that is in Toronto. Bears versus Bulls. You're in the GTA, I believe, Greater Toronto Area. And in the GTA, what time is it when you start? I guess it's, I don't know, like 4 o'clock in the morning? Something like that. 5, maybe? Okay. Let's see if I can send some membership gifting. Yeah. Yeah. Yeah, I did try streaming on X, Bears versus Bulls, and it seemed to throw the software off a bit. I was doing a simultaneous stream on X and here on YouTube, and it seemed to throw off the software a wee bit. And it produced two YouTube streams simultaneously, then it merged them. Something went really weird. Eventually, it seemed to sort itself out. I don't know if you've ever tried that with your crew over at Trader TV Live, streaming onto YouTube and Twitter at the same time. It's a good idea, but I don't know if the software can quite handle it just yet. Right, let's go back to the charts. One last look before we go. And see what's going on. Well, there's nothing moving, but I really want to look at Bitcoin. Nothing else is moving. Okay, so those of you Bitcoin freaks, let's talk about Bitcoin because nothing else is moving because the markets are not open except for Bitcoin. So let's have a look. I'll tell you what I think. First of all, I've got a decent position on this now. We've been adding on all the dips, starting at 59K. We're now at 68K, which is fantastic. I wasn't convinced that this was going to rally, but as it turns out, it did. I was prepared to hedge or cut some of my positions if we drop below 50, but we haven't done that. We've moved up rather than down. And I did put something up on X, which I found interesting. And with your indulgence, I'll show you what this chart looks like on the Renko chart, and also on that other chart I showed you just now. This is the Renko chart for for Bitcoin. What's interesting about this is that this is the longest period of consolidation. This is what you're seeing on the right-hand side of this chart is where we are currently on Bitcoin. Look at that big move up. By the way, there is a method to trade Bitcoin using Renko charts, which I find quite interesting. Not for everyone because you're not seeing the proper price moves, the highs and the lows, and so you won't be able to use massive size and leverage like many Bitcoin traders like to use. But if you want to swing trade this over longer term swings, like weeks and months, it's not a bad instrument or tool to use as a Renko chart. But what this illustrates is that Bitcoin, this consolidation that we're seeing now, is the longest period of consolidation, as far as I can tell, that Bitcoin has ever had, which is interesting for a start. But also, the last time that we did that, we moved down and then moved up. This time, the shape is different. If you have a look at the one on the left-hand side, we have a topping double top castle type formation. It's a very different shape to what we see in the current block. And this current block is exactly the same. I've just copied the previous one. So the purple block on the left is identical to the purple block at the point that we are at the moment. We've now gone out of the purple block. This was the longest consolidation. Now this is the longest consolidation. But this is not the same shape. It's also a sort of a bull flag type shape. And it's also above that area and above this area. So we're trading in a very tight bull flag range above both of these previous highs with a different shape to this previous consolidation. That looks weak and negative, whereas this looks positive and strong, with the last three Renko blocks being bullish. So we've actually turned bullish on this Renko chart. So that was the first thing that I found interesting. And then I had this diagram here, which I also showed you a little bit earlier, and that's this three block rally. 1, 2, 3. Third one will take us to 103. And that's that same flag that you saw on the Renko chart. This is a line chart drawn in with not smooth lines, but integer lines. I don't know what you call them. The staggered lines, and it's not a curve. They're blocky lines. Doesn't really matter. The point is we've got a bull flag going on this chart as well. This is actually reflecting the chart, the price. It's not a Renko chart. And it's a beautiful, perfect bull flag. If we follow this path and use that flagpole as the flagpole for this flag, we're going to go a lot higher than where I've got this green block drawn, that green arrow. We need to get a length equal to the distance from 20, call it 25, up to 75. That's $50,000 from the bottom, the flagpole. And then if we take $50,000 from the bottom of this flag, from 54, actually it works out to be almost exactly the same price. So if we take that flagpole and copy and make a duplicate of it, the same height, and stick it onto the end of this after this bull flag from the bottom, it will take us up to $104, which is also the same height as these green blocks, the previous rallies. A little bit higher, actually about 108. But we're talking $100 to $110,000 per Bitcoin. So using that projection based on the flagpole, bull flag, and next part of the process, or the technical part of it, in other words, a copy of the flagpole from the bottom of the bull flag, that would take us to 108. If we use this method, the 3 green blocks, we get to 104. So that's kind of pretty good from those charts perspective. And then if we go back to the charts, let's have a look at how that translates to the chart. Go back here. All right, so I didn't show you this. I did show you this fractal. And if I take the fractal from this move from this low up to this last rally, take that big fractal up there and draw that in at least partially up to this halfway house. If you're a golfer, you'll appreciate a halfway house. If we take the move up from here to a halfway house before it carries on, I've drawn that fractal over here. Actually, I've drawn the entire thing up to about there, I think. And let me just change the scale. That also takes us up towards about $100,000. It's about 96. So if we just copy that fractal from there across to there. So that's the way it looks on there. I'm going to get rid of that fractal because it's messy and get this chart scale back to where it was. And this is what it looks like on the day chart. We've got this beautiful line. We tried to spike down there, shook a few hands out there, broke down through that basing low there. This looks quite dramatic on the 4-hour chart and was a little scary. In fact, I did exit one position right at the bottom here. I exited a position here, at 65. It got down there, spiked back within probably under an hour. It was back up here at 65, and I immediately put that position back on again. And that's now formed a 3-touch trend line, and we're holding well above it and moving up. And it's also angled up into that pointy point up there, considering this previous trend line. So we're heading up into this triangle. Looks good so far. And on the 4-hour chart, I mean, who can complain about this? We had the pump from the Bitcoin conference, the 2024 conference, and Donald Trump and Vivek Ramaswamy talking at that conference, being very bullish on Bitcoin. A lot of hype, I agree. A lot of FOMO hype, a lot of, pump the Bitcoin stuff. Obviously, there's a Bitcoin conference. They're not going to say Bitcoin's shit, obviously. Neither Trump nor Ramaswamy. Even if they thought so, they wouldn't say so. But whatever they said was positively absorbed by the market, and we've seen the price holding up, bouncing up, and holding pretty strong. The moving average is curling up. So, yeah, no reason to be fearful on Bitcoin just yet. And remember, Bitcoin can change in a fraction of a second. It's that sort of thing. As one of my acquaintances over at one of the other Bitcoin channels says, Bitcoin doing Bitcoin things. And some of you I know will know who I'm talking about. So there's nothing else we can analyze on these charts because nothing else is moving apart from Bitcoin. And we've talked about natural gas and we've talked about all the other things. I will link the last live stream to the end of this one so you can watch it if you missed that one out. That was on Friday. And then I'll also copy the natural gas part of this video that we did at the beginning, put it into a separate video and put it up so that you can refer back to that a little bit later on if you want to. And also for those who couldn't make the live stream. Okay, folks. Well, I hope you have a fantastic evening. It's Sunday night, my time now. I'm going to go and relax a little bit, get ready for the opening in about 3.5 hours' time, and I'm looking forward to that. And going to have to decide what to do with my Bitcoin now in big profit. And also, we're going to navigate our way through this natural gas rollover. So, 1 a.m. 1 a.m. Damn. That's Bears versus Bull over in the Greater Toronto area. There's a guy who observes Dogecoin very attentively. Doing this, he uses any kind of interesting charts, including Bitcoin. It's really worth having a look. His name is Vision Pulsed. Okay, Dogecoin. I read a little tweet that Elon is getting rid of his Dogecoin and buying Bitcoin. Don't know if it's true. Probably not. Bears versus Bull. ArcisFX. Trump said he wants them to hold the US 5% of the Bitcoin supply. I don't know if they're going to allow that. Whoever might or might not allow that, I don't know if they can prevent it. But 5% seems reasonable. There was Vivek came on straight after, if you watched, after that talk by himself and Trump. Vivek Ramaswamy said, in fact, he dialed back a lot of what Trump said. And if you were careful enough to read between the lines of what he was saying basically, don't listen to what Donald's saying. He's saying we're not going to be putting huge amounts of Bitcoin into the US Treasury. We don't want the US government or any other government to have control over it, or a vast control over it through volume and percentage holdings. They don't want that. Of course they don't want that. That's what they're trying to avoid at all costs. So Trump was very like, yeah, we're going to use Bitcoin. It's all going to be part of the Treasury. US is going Bitcoin crazy. We love Bitcoin. Everyone loves Bitcoin. Make Bitcoin great again. And we're going to be pumping the stuff, and we're going to keep all the stuff we've stolen. We're not going to give that back. And we're becoming a Bitcoin nation. And then Vivek, about an hour later, said, not so fast. He said, we'd probably, this is a starting point for conversation, and it's not a good idea for the US to hold all the Bitcoin. So I think he looked a little alarmed and shocked, and saying all of that pretty quickly after Trump had said, we're going big on Bitcoin in the US. So we'll see. But I don't think that's the idea, is for for Bitcoin to be, like 60% of it owned by the US Treasury. I don't think that's a very good idea at all. And I think that's what Vivek was trying to say. Yeah, go and check out that. Well, it was it was an interview. He was talking with a young lady on the stage after his own speech or presentation, and he was really super quick to dial back what Donald Trump had said. But of course, you've always got to be quick to dial back what Donald Trump says most of the time. So, so everyone's used to doing that. So it's not a problem. So folks, before I go, at the top left-hand side of the screen, there's a scan button. Please scan there, fill in the survey, tell us what you want. And I'll be feeding back on that video, on those results in the next video. It'll be very, very interesting. And good luck with all your trades. Any other questions? I don't think so. Have a great week. And if you've got any questions, please put them up in X. Get hold of me. My email address is here on YouTube. You can reach me in multiple ways. All my social media contacts are all over the show. If you've got any questions, or if you need help, just contact me. I help quite a lot of people, actually. A lot of people contact me with trading problems, issues, risk levels that they're not happy with, all sorts of things, or questions, technical questions, questions about brokers, questions about sizing, all sorts of things. And I'm always willing to help people who have questions free of charge. So you can just get hold of me on any of my contacts, and I'm happy to answer any of those questions. Damajan, one more question. Will it go up or down tomorrow? Well, I don't know, Damajan. I'm generally quite positive on natural gas. Have we got the charts on the screen? Yeah. So yeah, I mean, look where we are. $2. It's such a key level. The bulls defended that level on Friday. We've got a triple bottom just ahead, just in front of us. To me, generally, this looks like a nice chart, and I'm not dissatisfied with that. And the fact that we held $2 on Friday, the fact that we've still got a little bit more wiggle room to get to that previous low on the day chart over at the spot price, the fact that we might have to get to the top of this gap 1.92 and bounce, maybe we don't even have to do that. This triple bottom is very encouraging. The gap, the top of the gap, the whole thing. I quite like this chart. And also the bottom line is $2 is the beginning entry level to the $1 store. And we're right knocking at that door. We've been there already this year. We don't want to go there again. What happened last time we got to $1.50? Let me just remind you before we go. This is the NYMEX chart, Henry Hub, futures price, tracking the front month. I want to remind you what happened the last time we got down to 1 point. We didn't even get down as low as this last time, actually. But call it 1.5. We had one spike below 1.5. Took us to 1.45. But apart from that one spike, we held the 1.55 level. We had multiple attempts at that bottom. You can call that, this is a day chart, so you could call that I don't know, you can at least call that a double bottom. You could call that a triple bottom if you want. You can call that, let's just draw that in. Let's call this a triple bottom. Why not? We can do whatever we want. That's 1, 2, 3. You could call it a quadruple bottom if you want to, or even a whatever 5 is, and then up she goes. Now, what have we got where we are today? Not very dissimilar. Same price level, 1.5. What do we have here? Hang on, let's move along. This is going back to the beginning of the year, 1.5. What have we got? Then I'm going to shrink this whole chart down so that you can see. And that's where we are today at the right-hand side of the screen. Let's put that together and see how it looks with these little smiley faces. There we go. So not very dissimilar to what happened last time. We went from 1.5 to 10.5 the last time we got this low. So are we going to 10.5? I doubt it. But we could certainly give it a go to get up to $3, $4. The green line up here, $4.40. No reason why we shouldn't have a go at some stage, a little bit higher than $3. The average price is at around about $3 to $3.50 over time. We're well below average at the moment. And we formed a triple bottom, just like we did there. That's what happened. Let's have a look at what happened on the prior occasion to that. The last time before that, there we got down towards 1.5. Here we've got a double bottom. You can see why I say natural gas likes double and triple bottoms and tops. We've seen many triple bottoms and tops. There's another, not quite a triple bottom, but it's more like a, I suppose a W-shaped recovery, but again, a triple bottom. And we can do the same thing at the top if you want. You can go across all the tops. You'll see many, many triple tops. That's not a triple bottom, by the way, but it's got 3 lows. I'm not saying that's a triple bottom. It's more like a W. But, you know, it's at the same level, 1.5. Just around about there. Actually, that was about 1 point. That was actually at $2. That was at $2. That's where we are today. There we go. That's what happened last time we bounced off $2. We got down to $1.90 and then bounced. Okay, into that blue-gray area right there. That blue-gray rectangle at the bottom is where we are currently. There it is there. Let's put this on a weekly chart. All right. All these little black squiggles are what I've just drawn in on the daily chart, so they don't look great on the weekly chart. But there we are there. Every time we get there, we form a triple or a double bottom. That's, as I said, it's a W bottom. It's not a triple bottom because the lows aren't equal in size, in depth. But on this occasion, a double. On this occasion, a triple, quadruple, whatever. On the last occasion, a triple. Just a few weeks ago, triple bottom, quadruple bottom, double bottom, sort of a triple bottom. And you'll see it at tops as well. On a bigger time frame, there's a double top. Double top. Natural gas really likes these doubles. Another double top over here. Call that a triple top, actually. Triple top. Okay, that one's a bit squiggly, like that. Triple top there. Double bottom here. Natural gas loves it. The triples are better than the doubles. There's another double there. I've circled those ones in those blobs. And there we've got our triple. So I think this is going to gap up. I could be completely wrong. I'm not betting on it. It's not something I'm prepared to gamble on ever. But I do think that's my most likely scenario. put that in your pipe and smoke it. Don't believe me? Please don't take that as gospel or as a guarantee. Certainly nothing like that. But that's what I'm leaning towards. If it doesn't happen, that's fine. I'm looking to buy more natural gas anyway. For those of you who need natural gas to bounce right now, tonight, in a few hours' time, I'm holding thumbs for you, and I hope it does that for your sake too. Okay. Thanks, Bears versus Bulls. Appreciate it, mate. I really do. It's really nice to see you. You know, I can't. You'll be able to look up. I can't remember when I joined Trader TV Live as a casual observer. Then I joined. I became a member. I think it's only $5 a month, but still, I'm showing my support, and it's a wonderful place to be. Fantastic traders. For those of you who like day trading stocks, stock names, particularly tech stocks, I'm talking to all of you who are watching or in this live chat. Trader TV Live. Wonderful place to be, even if you just want some fun times and trading in the background whilst you're doing your work. Highly recommend it. And yeah. Oh, you're asking about silver. Silver. You got to say what you're asking about. I know you know what you're thinking about, but I don't know what you're thinking about. So you're asking about silver. What do you want to know about silver? You'll have to retype it because your question's long gone. I can't find it up there. Inverted head and shoulders on silver. Inverted head and shoulders on silver. Let's have a look. I'm assuming. All right. Let's. Inverted. I don't know, man. No, I wish you could post your chart up here, but I don't see it, I'm afraid. Basically, basically on silver, I see a breakdown through support. It was not only support, it was also resistance prior to that. Down below all these moving averages, the 20, the 50, we're now below the 100 after Friday's move. The next stop, the 200 at $26 and possibly 25 and possibly 23. First stop, first opportunity to buy silver, in my case, in my opinion, is $26, the 200 period moving average, this swing low, that swing high. $26, $25.90 if you want to be precise, which you should be, pedantic. Thanks, Bears versus Bulls. Appreciate it, mate. Yeah, and talking about nice guys, you are one of the nicest people because you have the task of moderating a room with thousands and thousands and thousands of people watching the live trading every day, and there are some interesting characters around. So you do a pretty damn good job, I have to say, and very nicely without aggro and aggression, which I think I appreciate very much. One of the reasons why everyone likes being there, because of you, I think. Yeah, I don't see an inverse head and shoulders we vibe and Damajan. I don't see it, I'm afraid. Okay, folks, I'm going to get the natural gas video chopped out of this one and uploaded now. Please, if you've got any questions, type them up in the comments if the comment section pops up under this video, or email me or message me, whatever. If you want to join my private group, there's a link below. It's $100 a month, roughly. I don't think you'll get a more honest or accurate trading opportunity or room. And of course, my trading course is coming out in September, 1st of September, I'm hoping and aiming for. So make sure you get on that early bird list, the links below, and also fill in the survey. Okay, folks.